Want to kick this off and thank everyone for coming. I'll introduce the panelists just shortly, but just for those of you who are not aware who we are SCORE. We're a national organization. We fall under the SBA, and we have over 300 chapters nationwide with 11,000 volunteers. And these are people that serve and provide their expertise to you as business owners to give you information to help you become more profitable and really enhance your business opportunities. And I was a consultant for over 15 years. The information that you get here is just invaluable. So welcome. We're really glad that you've taken the time out of your schedule to learn more about the PPP and that initiative going on. A little bit more about us. If you're in the research and planning phase or opening a business, if you're looking at scaling your business or growing your business or looking at exiting your business, we are the people you want to talk to. So if you want to contact us, we are SCORE Minnesota. You can reach out to us and get a SCORE mentor. We're happy to help you on a one-on-one basis. Also, this is provided to you through a lot of sponsorship, and we truly appreciate our community partners. We could not do what we do without them. So definitely want to recognize them and thank them for their support of the business community and of SCORE National to bring this kind of information to you guys. What you're going to be learning about today, yay, the amended PPP and learning about this program. Barry has spent countless hours, and we're so appreciative of our mentors and for Barry just giving up his time, going to different workshops, trying to figure out, what's the best opportunity to present this information to you folks in an easy to digest manner. So after attending many sessions, he had attended the Santa Barbara SCORES webinar with Chair and Vice Chair Greg Loosevelt and Eric Saltzman, and they're joining us this evening. So thank you, Barry, for getting both of them on board, and thank you to Eric and to Greg for coming into the fold and helping us this evening and providing this information to folks. And there's our wonderful panelists there that you get to see their great picture. So just a little bit more information about Barry and Eric and Greg for all of your edification. Barry's retired after 36 years as president of Healthcare Industry Management Counseling Firm. His work in healthcare provided expertise in developing operational, strategic, and financial systems that helped his clients implement strategic business and marketing plans to improve performance. He has extensive experience in getting to the heart of complex operational, organizational, and financial issues. We benefit from that as he's on our executive committee for SCORE Minnesota, but he also used that to help his clients grow their business. He has his undergrad and grad degrees in business administration from the University of Illinois and the University of Pennsylvania, respectively. Eric's background is serving in the tech sector, C-level positions, CFO, COO. He's been part of founding management teams with early stage companies all the way through to $3 billion market cap public companies. So a wide variety of expertise there. He's worn a lot of hats and taken a broad range of roles, including business plan development, operating models, working with investors and venture capital relations, debt and public offerings, development of key partnerships and strategic relationships. And obviously that has boded well for us this evening to have him with us. So thank you so much, Eric. And then finally, Greg, who's the chair of the Santa Barbara SCORE. He is a business advisor who manages a community of startup growth leaders. He's passionate about economic equality, a graduate of Yale. He was one of the founding members of Mitchell Madison Management Consultants and founder of Sargus Partners, a long-short hedge fund. During his career, he's invested in companies of all sizes and started and sold companies. Greg has focused on increasing access to products and services that unlock human potential, from software to sustainability. He spent most of his career as a financial analyst and CEO. With responsibilities ranging from strategist, portfolio manager, scaling operations and product management, rolling out global products. Greg did this, and then he eventually sold his company with 1,200 people. And he worked with a nonprofit to address environmental issues with sustainable technologies. So loves What he's done and combines that with teaching, just phenomenal individuals that we have as resources here at SCORE. And that's one of the reasons why so many people come to us for advice and mentorship. So without further ado, our wonderful disclaimer, I don't need to say this information, we're providing it to you. It's what we have at the moment. As things roll out, we'll provide new updated information if it becomes available. Our agenda this evening, so you kind of know how this is all going to roll out. Eric and Greg are going to provide a fireside chat style implementation of some information. Barry will be providing you with information as well. So you're going to get, all the information that you will need about PPP2 as well as EIDL. So we're hoping that this is really super helpful for you. And we're very excited to get started here. So without further ado, I will turn this over to Eric and Greg.
Good afternoon. My name is Greg Loosevelt, and Eric Saltzman would join me shortly. I think the first thing we want to talk about is what I think Eric and I think of changes in PPP that are mostly based on three buckets: flexibility, simplicity, and some consistent applications of current law. Eric, can you help me understand why the new PPP and exactly what it means that it's more flexible?
So yes, the flexibility comes up in several places, but the primary one is under the old rules, you could use either an 8-week or a 24-week forgiveness period if your loan was before June 5th of last year, and after that, a 24-week period. Now you can pick any time period from 8 weeks to 24 weeks as your forgiveness period and use your PPP funds, which means you can tailor it to your business, get to forgiveness as quickly as possible for your business, and then move on in managing your business without the restrictions that come from using PPP funds.
So it used to be I had to say either I'm 8 weeks or 24, and if I picked 24, Eric, that meant that I had to not lay anyone off during that 24-week period. Is that correct? And now I don't need to do that?
Exactly. You needed to maintain your payroll through the entire 24-week period. Now, if you use your PPP funds in permitted purposes, which we'll come to a little bit later, in say 12 weeks, after that 12-week period, you would be eligible to apply for forgiveness, and you can make changes to your staffing as dictated. So if you need to do reductions at that point, you can do it without jeopardizing forgiveness.
It really adds flexibility to how I run my business. Now, the simplicity of it, why is the new PPP simpler than the old?
Well, because for any loans under up to $150,000, they've now, and this actually, the application actually came out in the last couple of days, and it is very, very simple. You fill out an application that basically says number of employees at the time that you started, number of employees at the time you're completed your forgiveness period, and the amount of the loan that you spent on payroll cost, and the requested forgiveness amount, and that's it. So it's very, very simple, easy to do. It eliminates, for the most part, having to do complex calculations on FTEs. It allows you to get through the process quickly. You don't have to submit any documentation with it. You just have to retain a limited set of documentation in case the SBA wants to come back and review. And one thing I'll note here, just as an aside, if you've already filed for forgiveness using a more complicated forgiveness application, but it hasn't been reviewed yet, you can go back and resubmit using this simple form, and probably save yourself some headache and simplify that process.
That's excellent news. So let's break that down in a couple areas to make sure I understand. First of all, I don't have to worry about the FTEs, which I never could figure out to begin with. Second is the EIDL loan, that whole thing, whether I had to deduct it or whatnot, that's all gone too?
So the EIDL grants, yes. So up until this point, before the new act came through, if you had an EIDL grant, that was deducted from what you could get forgiveness on your PPP, and you would have been left with a PPP loan in the amount equal to that EIDL grant. Now they have eliminated that requirement. You can get full forgiveness for the PPP and keep your EIDL grant in full. So it's additional money in the pocket for the business.
Don't need to worry about that. Do I need to, is the new form, is it through my bank or is it through the SBA?
So you apply for forgiveness through your lender. Some lenders use the SBA form as is. Others will adapt it into an online forgiveness application and to facilitate that, but they're not allowed to make it more complicated than what is in the SBA form.
So my simple way of thinking about this, I just have to say, I used the money, I kept the same number of employees, and I should not lie or not be dishonest on my application, and I'll get forgiveness. Does that kind of sum it up?
Yes.
Okay. Now, consistent application, what do we mean by that?
I'm sorry, consistent in the context of?
Consistent. Now, the deduction of expenses and taxes and all that kind of stuff, and now that's consistent like I used to do it, or has it changed?
Okay, so the big change here is that now there's two things that have happened. First, the new act has overridden the IRS interpretation that if you use PPP funds to pay for expenses, those expenses are not deductible as a business expense. And now you have clearly the ability to deduct business expense as usual. You don't need to distinguish between PPP paid expenses and non-PPP paid expenses. So that's very simple. And then there's been some expansion to the covered categories that make it easier for you to use your PPP funds. So in addition to rent and utilities and this very narrow list before, you're now allowed to do PPE equipment, facility modifications to make the facility safe for the COVID world in accordance with health and safety guidelines. You can use it to purchase in supplies that are essential for operation of the business at the time of business. So if you're a restaurant, for example, ingredients that would go into your food would be an eligible expense. And then you can do any sort of software expenses for covering things like your accounting system or any sort of other software that might be subscription based. You can cover those subscription costs. The only limitation, sorry, go ahead, Greg.
No, go ahead, Eric, please.
The only limitation that remains is that you still have to use at least 60% of the total funds that you get for payroll expenses.
So maybe let me try to understand this. Anything that is in my cost of goods sold that I buy, now I can deduct those expenses most likely. Is that the case?
Yes, with the guidance being that they have to be things that you needed to buy at that time. So you can't forward load inventory that you're not planning on selling for the next few months. It has to be things that really are important for current operations.
Okay. And so anything like that. And then plus there's some additional expenses like software and cloud. So some additional administrative expenses I can probably also include in there that before I could not. Are those the two big buckets of things that now I can include?
For some businesses, the biggest bucket of this is PPE and facility modification, because those can be for some businesses quite significant. So that one should be considered as well.
Okay, thanks. Let's go to the next slide, please. Now, let's think about who is eligible. And I guess there's two buckets of folks here. Those that have triple P and those that have never had triple P. Let's talk about the first one, Eric. Those that already have triple P. So I can get it again, it sounds like, but there's some severe restrictions on if I can get it again. Let's talk about the restrictions on my ability to achieve a second triple P grant. Can you help me understand those? What are the main restrictions?
So the main restrictions are they've put a cap at $2.5 million. So it's 2.5 times your average payroll up to 2.5 million. For most small businesses, that won't matter, but it was intended to keep larger organizations from getting funds. You're limited to 300 or fewer employees. And then the other two are that you have to have used your first PPP loan. That doesn't mean you have to have applied for forgiveness or gotten forgiveness, but you have to have used the full amount of the loan before you can apply for another loan. And then the biggest one is you have to show need. And the way that the law requires showing need is that you have to show a 25% drop in gross revenue for any quarter in 2020 compared to the same quarter in 2019. So it could be the quarter ended March 31st, June 30, September 30, December 31, as long as you compare it to the same quarter year over year, and you can show a 25% drop in gross revenue.
So let me try to understand that, Eric. So gross revenue, should I just think of gross revenue as my sales number?
Yes, I mean, and the guidance that's come out now really ties it to the IRS definition of what's included in gross revenue. So your accountant can help you with that, but it's basically the very top line sales number that you would show in your financial statements.
So let's just say sales number for simplicity. And then either in the first quarter, which I guess is January, February, March, or the second quarter, third quarter, fourth quarter, I compare 2020 to 2019, and I need to show at least a 25% drop in my gross, in my sales number, my revenue number. Is that
That's correct?
Okay.
Yes. You can also, by the way, compare full year. So in some instances, you might get to that 25% number, not in any given quarter, but by looking at a full year. So that's an option as well. But most people will find the quarterly easier way to do it.
And does it matter? Do I compare accrual or cash basis? You know, that little switch on QuickBooks. What do I?
So the rules say that you compare based on the way that you report your financials and do your taxes. So if you're on a cash basis for taxes, you should compare on a cash basis for purposes of determining the quarter over or year over year decline.
Let me ask you a question here. You know, I've struggled this year, as most of us have, and my restaurant, I started selling this and that, you know, purses and jewelry because I couldn't sell food, and so I've done okay with that. But my food sales have dropped more than 25%. That's my real business. I just took the side businesses on so I could actually, you know, try to make a little more money. Can I not include and I didn't have those side businesses in 2019. So I just compare food sales to food sales?
No, unfortunately not. The standard is the sales for the legal entity. So if you set up a separate business to do those things, then you could treat that as separately. But as long as it's part of your same legal entity that you operate that restaurant under, then you have to include all sales in doing the comparison.
So the biggest thing to get triple P again, I got to be down 25%, and I can't be a big business. Okay, let's go to new borrowers. I never got triple P for whatever reason, but now I can get it. Is that if I fall under these buckets? Is that it? And talk to me about the buckets and how do I qualify, please?
Okay, so yes, you have to have been in business at February 15th, 2020, and then the same cap applies as far as dollar amount, but you can have up to 500 employees with some expansion of that for the hospitality sector, which limits you to 300 employees per physical location. And then you have to be eligible for other SBA 7A loans. And that means that you are defined as a small business that would be eligible to apply, not necessarily that you would get approved for those loans.
Let me ask you a question, Eric, there, because that's a big issue. And was not in prior triple P. And the qualifier under 7A usually have to be in business 3 years. You have to be profitable. You have to have a certain business FICO score. Is that the kind of rules and regs we're talking about here?
So we're waiting more clarification on that. Given the requirement in the rules that you have to be in business at February 15th, 2020, the SBA requirements for 3 years of operation and those other things don't seem to align with that regulation. So we need guidance, and this is something that you could ask your lender for additional input on.
Do we have any understanding why that SBA 7A loan provision was put in this triple P?
I have not seen any clarification as to why that was put in at this point.
Thank you, Eric.
Okay. And then the other thing is it's expanded eligibility for sole proprietors and independent contractors, and also added categories of nonprofits, including churches and community organizations. So it makes the money available to a broader potential pool of applicants.
Okay, so the old triple P gig workers were not allowed, Uber drivers were not allowed to get triple P in the old one?
Not directly, no.
Okay, they were only allowed, I think they were allowed the EIDL grants.
Yes, they were allowed the EIDL grants, but they were not allowed the PPP.
Okay, nonprofits, that's been expanded, and I need a certain number of employees. Let me ask you a question on both these. When it says 2.5 times the monthly payroll, if I got triple P the first time, and now my monthly payroll has changed, do I use my monthly payroll as it was in February 15th, 2020, or do I use my monthly payroll as it is today?
You have options here, and you can use either your two. Let's talk about businesses that have been in operation for a full year and have not seasonal businesses first. And those businesses can choose either to use their average monthly payroll for 2019 or for 2020. And then if you are a seasonal business or don't have that full year of operations, then you have some other rules that apply in picking the period that you're allowed to use.
Okay, great. Let's go to the next slide. And these are some unusual cases. Let's call them kind of special classes of folks that have increased eligibility under the new triple P. And the first class is this unusual case, Eric, I think. Someone that got kind of nervous and didn't know if they're going to have to repay this, if they're going to qualify for forgiveness. So instead, they just repaid the loan immediately. And in that case, so if they return some of the money because they weren't sure they needed it or they weren't sure they were going to be able to pay it back, they now can go back and claim that money again? Is that it?
Yes.
How does that work?
Well, you would go and you would apply for a new application as a new borrower and indicate that you were not looking for a second draw, but that you wanted to modify your first draw. And this could be, as you said, because they got spooked by some of the things they were hearing. It could be because when they borrowed the money initially, the 75% use for payroll was in place and they were concerned that they couldn't meet that requirement, so they reduced the amount. Or it could be because they were offered a certain amount and they decided to take less than they could have taken.
Okay, so this is either I took less or returned it all, and now I can go back and actually get what I would have gotten under the first one without qualifying for a reduction of 25% in my business. I'm like a new borrower.
Exactly, and that's key
like
because it eliminates that 25% reduction requirement.
This is really like a redo for them. Is that it? Do-over.
Yes.
Okay, got it. And then there might be some folks that applies to or not. Let's go to the next slide, please. Okay, new borrowers. Eric, tell me, okay, I guess it's already started, January 11th, about a week or so ago. So it's approved all lenders, but first of all, what's these selected lenders? Who gets it now?
So originally the first batch that was opened up was to small lenders in economically distressed markets. This slide is a little bit dated because now the window is open for everybody. So you can apply through your existing bank that if you're already a PPP borrower, I would strongly suggest for draw 2 going back to the same bank because they are familiar with you and know that process. But there's no rule that you have to do that. And for new borrowers, it's often easiest to start with your existing banking relationship, which will help facilitate this. But you can apply through other banks as well, and you can certainly apply with more than one bank if you feel that will help you get money, but can only take from one.
And Eric, we're not anticipating there's going to be any shortage, so there's no need to rush. I mean, obviously go as soon as possible, but they're not going to run out of money this time, are they?
No, when this first opened up last year, we did think that there was going to be a shortage, and it turned out that there was, but that was primarily driven by the very large borrowers that this new program excludes. And so wait around, most importantly, because most businesses could certainly use this money sooner rather than later. It's not a rush to the bank.
Okay, so let's look at the application. Let's go to the next slide. This is the address. Go back one slide, please. This is the address. If you need to find it, you can Google it and find the new application. But let's go to the next slide and take an actual look at it. Okay, first of all, Eric, it looks really simple.
It is very, very simple.
You know, I mean, to me, the hardest thing on this application, you know, maybe it's just because I have a tough time keeping things ordered, might be my loan number, my prior loan number. But I guess this one doesn't even have that. But let's talk about this code, this NAICS code. What is that?
So that's a standardized industry classification system. And it's used to put businesses into correct categories. You can Google it, and there are plenty of sites that will help you figure out the code for your business if you don't know it. The primary reason that this is particularly important right now, and we'll come to this in a few slides, is for NAICS code 72, which is hotels and restaurants and certain other food services. You can borrow 3.5 times your average monthly salary as opposed to 2.5 times. They understand that was a very hard hit industry segment and are making more money available. So that's why this code is particularly important here.
Okay, that's really good information. And the other things on this application that at least confuses me is I always get kind of spooked on this thing. Number of employees, is that FTEs? Exactly what is that, Eric?
At this point, it's just the number of people on your payroll. It's not an FTE calculation. It's a straight number of people on payroll.
Well, that's simple enough.
Yep.
And then what is this 2.5 plus EIDL? What does that mean?
Okay, so this one is only for new borrowers, and it's narrowly construed. But if you did an EIDL loan between January 31st of 2020 and April 30th of 2020, you can take PPP funds to refinance your EIDL loan. And that's not including the advance. We talked about the advance earlier, the grant. That's yours to keep it separate. But if you actually went to the next step and borrowed money under an EIDL, in that window, you can choose to refinance it as part of the PPP process here. And so they ask you to put in that loan amount if you are wanting to do that.
So let's talk about that. What do you mean by refinance that?
So if you have $10,000 on an EIDL loan outstanding, and you could use this money to pay off your EIDL loan, have everything come under the PPP. And if you can meet the forgiveness criteria in how you use the full amount of the money, potentially get full forgiveness of not only the PPP, but the amount of the EIDL that you refinanced. If not, and you still have some left over, you would have an outstanding loan balance under your PPP, but instead of it being 30 years at 3.75%, it would be 5 years at 1%. So you can do some cash flow to see which is better for your business. Obviously, lower interest rate is good, but having to pay it off in 5 years instead of over 30 years may increase the monthly payment even with the lower interest rate.
So let's go over this one more time. Make sure I understand. I got an EIDL between Jan 1 and April, what was it, April 30th?
January 31 and April 3rd.
Of 2020.
Yes.
Okay? So I was like one of the first people. There's probably very few of folks like that, right?
Yes.
Because
you have to have taken an EIDL and not taken a PPP, because again, this is for new borrowers, not second draw.
Okay, and then and so I might have been in an economic disaster loan to begin with, and I somehow got an economic injury loan, disaster loan. I took that, and I now have the possibility of converting that into a triple P loan and having it forgiven if I can show that that money was used in the proper ways. Is that it?
Yes.
Okay. I mean, it's a great thing. It probably is few people, but if you do, you should definitely think about applying for that. That's certainly great. All these boxes, which ones do I check?
So there's no downside to checking all of them. You ultimately can use them you could use the funds for only payroll cost, for example, but you give yourself flexibility to use it for other things if you check these boxes. So it's not a requirement that you use them for every one of the boxes you check. It only is saying that you may use them for that. And so there's not really a downside to checking the boxes.
Okay. And then there's a bunch of warrants and representations I have to make. And that's kind of it on the new application?
That is it.
Okay. I don't have to give them any kind of proof of I don't have to submit my 941s or anything like that. No payroll proof, nothing like that.
Not with the application. The bank that you work with may choose to request some of those things, but it's not a requirement for them to do so.
Okay, let's go to the next slide, please. So now this is a current triple P seeking a second draw. The site there shows you where the application is. Let's just go right to the application. Again, a fairly simple application. The one that I get stumbled on this one, Eric, is I guess I need to know my prior application loan number, right?
Correct.
And so I need to know that. Otherwise, the only other question I have here, and I'm not sure why it's not on the first one, Eric, is I can either do 2.5 or 3.5. And why didn't I have that option on the first application?
It's a good question. I think they just ran out of room on the form, because my understanding is that the 3.5 applies both to first draw and second draw if you qualify in NAICS 72.
So in the first application, if I'm a new borrower and I have a restaurant, I should really multiply my average monthly payroll by 3.5, but we're going to talk about that later. But just to make sure everyone knows, you might want to make, take a real second look at if you qualify for the extra multiplication number there. Okay, so that seems pretty easy. Gosh, Eric, what is this this reference quarter? Talk to me a little about these quarters. Is that 25% down thing?
Exactly. So this is really the meat of this application, which is you have to show that you qualify. And that is to show that you have quarter over quarter in reduction. Now, the other thing here is if your loan is less than $150,000, you don't necessarily have to put it in the application here, but you will have to provide the proof to get forgiveness. So you should make sure you meet the qualification before you apply in any case.
And that's it.
That's it.
Okay. Well, that's pretty simple. Hard to get tripped up there. Okay, let's go to the next slide. Okay, now we're going to switch topic to forgiveness here. Eric, anything else on these applications before we go to forgiveness?
No, the only thing I would add is that you're looking at the SBA forms, and your bank may put in place an online application process that looks slightly different than what you saw in those forms, but the content of what they're asking for should be the same.
Okay, that's very helpful. Okay, let's go to the simplified forgiveness. Okay, so this is only applies to people who got an EIDL, a PPP loan of a grant of less than 150,000. And if it does, basically, it's really easy to get forgiven. Eric,
literally, and look, now that they've released this application, you literally need to put in your business name, address, NAICS code, your taxpayer ID number, a little bit of contact information, check if it's a first draw or a second draw PPP. You need to know the loan number and the date, and you put in the number of employees at the time of the application, number of employees at the time of the forgiveness application, and your covered period. And then you put in the amount you spent on payroll and the requested loan forgiveness amount. You check off a few certifications that what you're providing is accurate, and you sign. And there's no documentation submission requirement that goes with it. You have to retain a small subset of payroll documents to show your payroll, but less than under the other applications, and you're ready to go.
Well, let's just go through this a bit slower for me, Eric, if we could. One, do I have to make sure I did not reduce my staff? Is that still a requirement, or doesn't it matter?
There's no disqualification from that. It's simply based on using the loan 60% of the proceeds for payroll under this simplified application. You do put in the number of employees that you've got, but that's it.
Okay, so I can actually have reduced my staff and I still could get 100% forgiveness.
Yes.
Great. Do I need to take, say I got $100,000 if I was that fortunate, do I have to spend at least $60,000 on wages?
Yes.
And do I need to qualify all those nasty little things like the owner cannot get more, no employees that make over 100,000
yes, you're still subject in how you use the funds to those caps. And that's something you can go through with your SCORE mentor to help you figure that out. And I know, Greg, we probably have a bunch more to cover. So this one, we should suggest that if you have specific questions like that, talk to your SCORE mentor.
Okay, so that's there, and I have to spend the other 40% on other items, which are expanded, and I have to do it no later than 24 weeks. All those rules still apply, correct?
Yes, correct. Okay,
but the one rule that doesn't apply is I can reduce my workforce down.
Yes.
Okay. Anything else we want to talk about this on this? And it's a application form, right?
Nope, I think that's good for now. And so let's move forward and get through the last few things that we've got here.
Okay, tax benefits. One of my favorite subjects. We talked about this briefly before, but again, tell us about the biggest one is the deductibility of expenses or not.
I think we skipped ahead. Greg,
Oh.
Apologies. We're on the industry specific stuff.
Oh, sorry. I missed a slide there. Okay. Thank you, Eric. So industry specific, tell me what the industries are here that get special treatment. These are special cases, correct, Eric?
Yes, and again, because they're special cases, good to talk to a mentor. But basically, we talked about the food services and accommodation where you can get 3.5 times instead of 2.5 times your monthly wages. And we talked about the expansion to additional categories of nonprofits. There are grants available for the transportation industry. Typically, it's for large airlines, trains, not really for a local limo driver or an Uber driver. So probably not as applicable. The big thing here is the grants for event services. And these are really live venues. And I think maybe we'll just flip to the next slide with this, Greg, because we have more detail there.
Okay, let's do that. Eric, tell me a little about what a live venue is.
So a live venue is a location where people come for performance, museum, motion picture theaters. It's someplace where there's entertainment being performed in real time.
Okay, it would apply to I'm a wedding planner. Does it apply to me?
Unfortunately, no, it's not aimed at that type of individualized event. It's aimed at events that are or venues that are available to the general public. And Paul, I think maybe we have another slide after this that would help us. Yeah, there we go. So the restrictions here get very technical, and you want to talk to somebody that can walk you through them. The big things to take away are there's again a 25% reduction in gross earnings required. You have to have been intending to or actually resumed operations. So you can't have shuttered your operation with no intention of reopening to get a grant. And there's the big one here. This is an either or with the PPP. You could either do this and look for a live venue grant, or you can take a PPP, a second draw PPP loan, or any PPP loan after this new act came into place on December 27th. So that's the big thing to pay attention to here.
I mean, Eric, if you think you fall within this, you really should speak to a SCORE mentor or someone that can help you work through this and figure which is best for you. Would you say so?
Absolutely. It's a great program, but there are a lot of technical requirements. And so definitely reach out and talk to somebody that can help you.
Great. Let's go to the next slide, please. Okay, now we get to my tax plan. Okay, Eric, talk to me about the first deductibility of expenses under the new PPP program. I know we talked about it a little before.
Right. So this one is a huge win because up until this point, if you used PPP funds to pay business expenses, the government was giving with one hand and at least partially taking back with the other, because they were saying now you couldn't deduct those expenses. That's gone away. You get the full benefit of the PPP and you treat all of your business expenses exactly the same way you treated them before, as far as whether or not they're deductible.
I know the second part, Eric, here, these payroll taxes. I know most of our clients have not taken this option, though I think you and I both believe it's a great option to take. And maybe you can tell us two parts of this, Eric, exactly what it is, how it works, and why, from a cash flow point of view, is this such a great thing to do?
Okay, so what this is it lets a company file their quarterly payroll tax reports as usual, but indicate that they want to defer paying those amounts that would be due, and they're allowed to put off paying, so the full amount that you would have paid through the quarter ending March 31 of this year. So anything in those periods can be deferred, and then you don't have to pay it back until the end of 2022. So they've extended that period to pay it back. So essentially, you get the use of the cash for that whole time, no interest, no penalties, and you then only have to pay it back at the end of next year, when hopefully the world is back to normal and your business has had a chance to recover.
So make sure I understand this. My payroll taxes are due in July of 2020. I decided to defer them. And now I do not have to, so I could defer them all through 2020, now all through 2021, and all through 2022. So basically for 2.5 years, I get to use the government's money.
Exactly.
Okay, that's a great deal. How do I do that? Is there special forms to fill out? How actually do I get this money?
So there is a form where you indicate that you want the deferral as part of submitting your quarterly payroll. Your payroll provider should be able to make that election for you.
Okay, thank you. This other one is maybe even less used. It's employee retention tax credit. Extended again for another year or a little over a year to July 1, 2021. Exactly.
Yeah, for most small businesses, the PPP, which can't do both, is going to be the better option. But what you can do under this is, if you don't use the PPP, you can get a tax credit for retaining employees equal to the wages that are paid to those employees. So essentially, the government helps cover the cost of employees. And this is technical, and you should talk to your accountant to make sure you understand how the calculation is done for your business. This is one where I would certainly recommend getting advice. And the biggest takeaway for this one is, if you think this may be a good option for you, make sure you don't take a PPP loan.
Okay, let's go to the next slide. This is a really important one for both SBA 7A and 504 microloan payments, which the government had extended, been paying off those loans for a period, I believe was 9 months, both interest and principal. The government will now pay an additional 3 months of interest and principal off of 7A loans and 504 loans. And if you're in one of the buckets that industry's hard hit, and Eric, these hard industries, are they the same industries that we talked about? These live venues, restaurants, transportation, are those the same numbers, or are they a different set of industries?
It's actually a little bit broader, and you should talk to your lender to make sure you're getting the benefit of this principal and interest forgiveness, and B, to get yourself categorized properly, because it does pick up food service and accommodation, arts, entertainment and recreation, which would be things like a gym, educational institutions, personal care services, which could be a massage therapist or a hair salon or something like that. So it's a broader bucket here, and you do want to take full advantage of this if you're a 7A or 504 borrower.
And this is a great program. I'm sure your current 7A lender will be in contact, but you might want to approach them and ask them when this program is going to kick in. Okay, let's go to the next slide, please. This is a whole list of kind of individual benefits that apply. And we're going to quickly go through this. One, Eric, that I thought we'd spend a few minutes on, because it's unique, but maybe it applies to a few people, is the $100 additional for workers that have both wage and self-employment income, but whose UI benefits does not take into account the self-employment. Do you understand that? And can you explain that a little more to our audience?
Yes. So the scenario here is somebody who has a job where they get W-2 income, and then maybe they drive an Uber or a Lyft as an independent contractor, or have a side business where they're selling products online or whatever it might be. Before, you would only be eligible for unemployment benefits based on your W-2 income, and that would be the calculation. Now they're acknowledging that part of what kept you going as far as your total wages was the self-employment income, and they're going to add an additional $100 a week if you fall into that category. So it is a nice benefit for people that otherwise were not getting covered for their self-employment before.
And that's something you apply through the state, and it's not retroactive, it's just going forward. Is that correct, Eric?
It is not retroactive, but it will pick up. There's no gap in coverage because some of the programs lapsed. And if you were under those programs previously and they lapsed, the intention is that when the act was passed, it will pick up the coverage and fill that gap.
Okay, but I do need to apply for it. It's not going to be since automatically.
Yes.
Okay. And
No, absolutely. You need to apply, and it is through the state. While it's a federal program, it's administered by the state unemployment office.
And then again, on top of that, the extra $300 a week that will continue through sometime through mid-March. So that's an important part there. There is a program for some student loan relief if your employer is willing to do that. So there's a program there. That's an excellent program. I'm trying to think, any of these others we want to cover, Eric, that you think we should mention?
I think we might want to move on.
Okay, let's move on. I think that's it for us. And thank you very much for listening.
Thanks, Eric and Greg. Wonderful presentation, very helpful. What I want to do this evening is talk about some of the EIDL issues. But before I do, I wanted to let people know that in the last day or so, after the presentation was prepared, there have been 4 separate issues that have come up. And what we're going to be doing tomorrow morning is modifying the deck to include the new information. That information is going to be reference to the new PPP loan forgiveness application that Greg mentioned. We're going to have a link to it so you could actually print it out and see what it's like. Secondly, the SBA came out with some instructions about how to calculate that 25% revenue reduction for the second-time borrowers, and then also some guidance about how much money you can actually borrow for a second-time borrower. I'm going to touch on a new change in the EIDL advance information. And then lastly, as Greg and Eric were just talking about, one of the other recent changes, I think it was either yesterday or today, is that the deferral of payroll taxes that their slide showed coming due at the end of March of this year actually now has been extended. So as those guys were just saying, you don't have to pay your payroll taxes for 2020, and now you don't even have to pay it for the entirety of 2021. So with that in mind, let's go on to the next slide. With regards to the EIDL program, the very good news is that the applications will be open now for all of 2021. They were thinking about closing it, but they put some more money in there. And so if you're looking for an EIDL loan, you're now able to have all year to consider that. Just as a reminder, the EIDL loans require a 3.75% interest rate. If you're a for-profit, 2.75% if you're not. You can take 30 years to pay it off. But the important part here for tonight is that the application portal for an EIDL loan, not the grant, but the loan, is now open until the end of the year. Next slide, please. Now, the references that Eric and Greg make, and I want to reiterate because it's important. The SBA said that they're not going to deduct the EIDL advance from the amount of the forgiveness of your PPP loan. So if you had a $50,000 PPP loan and you had a $10,000 advance, the old rule said that you would have to subtract that $10,000 and you would owe that to the bank. Now that's not true. If you borrow the $10,000, if you have an advance of $10,000, it's your money. Now, the second paragraph says that actually the SBA is going to give you your money back for the advance that they deducted from your PPP loan. And in some of the literature that I just read today, it's something in process. But if they did take the amount of your advance away from your PPP loan forgiveness, you will get that money back. Next slide. This slide is going to be replaced by another slide, because what I learned today is the following. Where it says new EIDL grant program, what it really should say is new targeted EIDL grant program. And what that means is this: based on some information that I learned today, if you are a business and you are not yet in the EIDL system, you are not eligible for a grant. The grants are only for businesses that were in the system and were located in low-income communities, suffered the 30%, and had less than 300 people working for them. So the grant program that was valued and it was really important is still important, but it's only going to be eligible to businesses that were already in the system and also can meet these criteria. In the presentation deck that you'll get, this will be modified. Next slide, please. If you want to learn about the EIDL grant, this link has been replaced by a new link. Again, I will include the new link in the deck that we send you tomorrow. Next slide, please. What we've done in all of the webinars that we held last year, and what we want to continue for this webinar, is to provide you, our clients, information about the programs. Next slide, please. So what we want to do is start with providing you information, which is a high-level overview. It's actually a one-page summary of the first draw and the second draw loan program. Those are the two links at the top of the page. If you're interested in learning more about it and deciding whether or not you want to apply, I'd suggest you go to those links. Next slide, please. The loan applications that we're talking about, there are links here. I would echo what Eric said, and that is the SBA publishes the application form, one for first draw, one for the second draw. But when you go to your bank and say, I need to get an application, or I have an application for a PPP loan, they may say to you, well, we would rather have you use our application online. But I imagine most of the information in the links that I show there would be the same as what the banks would be providing or asking you to provide. Next slide, please. There are 4 articles. Some people like reading articles to kind of give you an overview. I know for me, that's one of the ways that I try to keep up on all of this. Jerry Detweiler is one of the more prolific authors about this. Her article about the loans and how to qualify is shown there in the link. The Journal of Accountants, when I first saw that, I said, oh, I'm not an accountant, I'm not interested in that. But I would suggest that you read it, because it's really not for accountants, it's really for the lay public understanding each of the elements of the program. Next slide, please, Paula. One of the people who are adept at providing really valuable information is an attorney by the name of Alan Glassman in St. Petersburg, Florida. He writes for Forbes magazine, and those 2 articles on that slide provide an excellent overview of the PP program as well as EIDL. Next slide, please. One of our mentors in our chapter, Rick Ross, provided me a reference to the Small Business Development Corporation in Michigan. This is a great Q&A document that they get questions about and would be very valuable. Next slide, please. The video from the U.S. Chamber of Commerce, I just looked at this the other day. It provides an easy to understand explanation of the different programs and answers a lot of the questions. Next slide. So in closing, the next slides are for those clients who are on the webinar tonight who are looking for a loan. And the first place that we suggest you go is to your bank. Continue. Next slide, please. This slide is just a links of banks with national footprints. Next slide. For those of you here in the Minnesota area, this slide was produced back in the summer of last year. I cannot guarantee that they are still accepting PPP loans, but if you go to the links, you can get that information. Next slide. When we were talking last summer about applying for PPP loans, we talked about a fintech company. These are basically companies that do a lot of electronic loan application information. They're easy to get through. And then Paula, the next slide is simply a long list of all of the fintech companies. The one that we highlighted is one that's affiliated with the SCORE Foundation. Next slide, please. So I'm going to take the first takeaway slide, and then Greg and Eric will take the second takeaway slide. It's kind of a summarize of what we talked about today. First and second round PPP borrowers have until March, the end of March, to apply. That's only 10 weeks away. For those of you that are not sure about what you should do, or you're not confident about whether or not you can apply or whether you're eligible, again, I would ask you to talk with your SCORE mentor. They will be able to help you. The other element that we want to be sure of is, in order to be eligible for a PPP loan, your business had to be in business on February 15th of last year. If you opened a business over last summer, you are not eligible for a PPP loan. Greg and Eric talked about the 25% reduction rule for second-time borrowers. And again, there's going to be information we'll include about how you calculate that. As a matter of fact, one of the questions that came up this evening that I'll answer now is, somebody said that they got a Sarasota County CARES Act grant, and they asked if they would be eligible for a PPP loan. And here's the answer that I have, and this came from the U.S. Chamber speaker. If you got a grant, an infusion of cash, let's say in the third quarter of last year, and that meant that you did not meet the 25% reduction rule, you still could use the fourth quarter or the second quarter of last year if in each of those quarters your revenue was 25% less than it was in 2019. We also talked about the fact that you can borrow 2.5 times your average payroll, or 3.5 times your average payroll if you're in the hospitality business. Next slide, and Eric and Greg, would you take this one?
Sure. Eric, would you like me to start off here?
Sure, why don't you go ahead, Greg?
Well, as we talked about, the criteria has been expanded for expenses. As Eric pointed out, in 3 major areas. 1, in the cost of goods sold area. 2, in PPE and modifications that you had to do because of COVID-19 expenses. And 3, in the area regarding some operating expenses for software that you need to run your business. The second thing, PPP loans are not tax deductible, and very important part there. The flexibility that borrowers can choose between 8 and 24 weeks. a very simplified approach to forgiveness and a new application that's out. The documentation is very limited, but please keep your documentation. And also, please read over the representations and warrants that you make as you sign this thing. We've extended the EIDL application period. And the most important thing is that EIDL loans grants will not be deducted. So the forgiveness will be 100%, not the grant, and not deduct the grant off that. And finally, there are some new EIDL grants for very selected applicants in selected areas. Eric,
Greg, can I just interject for 1 second? I'd like to make one clarification because I think it is one of the very important benefits of the new laws. The covered period is not 8 or 24 weeks, as this slide suggests. It's anywhere from 8 to 24 weeks at the selection of the borrower. And we talked about that earlier, but I just wanted to make sure if we're flagging takeaways, that one I think is worth noting.
a great correction to the slide. Thank you, Eric.
Yeah, thank you. Let's move on, Paul, to the next slide. So where are we today? Because we want to leave some time. There are about 8 or 9 questions. We think you should talk with your SCORE mentor. If you don't have one, you can ask for one. We'll try to help you with all of the issues that you have or questions about. We will provide updates to the PPP program. As I mentioned, for the ones that we just got, we'll include them in the slide deck that we'll send out sometime tomorrow. And depending on what's going to go on in the future, if there's anything really significant, we may have another webinar. So with that, Paul, I'll turn the program back to you.
Great. Thank you so much. You guys have given us so much information to move forward with. We do have a lot of questions in queue, so I want to get to those questions and allow you guys some time to answer them. The first is PPP tax deductible? I thought I heard you say it's not tax deductible. Is that correct?
So PPP is tax-free as far as the amount that you get that is forgiven, and the deductibility discussion we were having was around whether the expenses you paid with the PPP could be deductible. The new law fixes an issue with the previous IRS guidelines and says that yes, you can deduct expenses that you pay with the PPP just as you would any other business expense. So if it qualifies as a business expense that would be deductible, you get to deduct it whether you use PPP funds for it or not.
Okay, so the question specifically was, if a business took out a PPP loan back in mid-2020, but receives forgiveness in 2021, is the PPP considered tax deductible for 2020 or
Yes.
2021?
So I guess that the problem in answering the question is it's not tax deductible, it's not taxable. So it doesn't count as your taxable income.
Okay, and the expenses would be deducted in 2020, is that correct?
The expenses you would deduct, we should need to talk to your CPA. There are things that can come up for specific businesses. We always recommend you talk to your own tax advisor, but generally speaking, you would deduct those expenses in 2020 just as you would have if you had paid for them with other funds beyond PPP.
Yeah, let's,
Sure.
Eric, if I could add a couple things, because it seems like there's a bit of confusion. One, first of all, it starts out as a loan. So of course, loan is not an income. And if you believe it's going to be forgiven, it could go then into a grant. And I would not, unless you think differently, Eric, put that grant money in my sales bucket. I would put it below the line and not have it as income. I'd have it as other income, grant income. And so I would not have it as revenue above the line. I think that's really important. And it's probably important regarding this 25% reduction issue too. The second thing, what Eric and I were talking about when we said the expenses that normally you can deduct expenses related to your business, like wages, cost of goods sold, software, all these other things are normal expenses. And under the old PPP program, you were not allowed to deduct those if you used PPP money to pay for those. Under the new program, you can. I hope that helps clarify it. Eric, did you want to add anything?
No, I think you described the treatment exactly as I would have. The only thing I'll say is that the SBA's Q&A and guidance that's come out explicitly says that any forgiven first draw PPP or EIDL advance, which are not subject to federal income tax, which is the case here, wouldn't be included in the calculation of gross receipts in a quarter. So if you were comparing year over year for purposes of qualifying for PPP2, it also doesn't count for your gross receipts there.
But again, as Eric indicated, please seek out your CPA to understand what Eric and I talk about above and below the line.
Great. Paul, what's the next question?
Yeah, staying on the tax line here, looking at the tax piece. Someone asked, I'm an LLC acting like an S Corp. Which box should I check?
Well, what I think they mean by that is, to me, an LLC acting like an S Corp means that it is not flow through and the LLC is actually paying tax. I think that's how I would interpret that question. Eric, is that how you would look at it?
Well, I guess you can interpret it either way. So let's tackle it more broadly. The question you need to answer, first of all, is, are you passing through the profit and loss of the LLC to the owners, and those owners are reporting it on their personal income taxes on a Schedule C, or is the LLC paying taxes at the entity level as if it were a corporation? And that's the distinction that you need to answer. And if you're not sure what the answer to that question is, again, you should talk to your CPA. And then I'm not sure which box we're talking about. There's a lot of different boxes on these various forms. So if you have specific questions on that, I would suggest talking to a mentor and going through the form that you're referring to.
Yeah, and the question that Eric asked is, do you receive a K-1 or not? Is you start off the question, it would tell you how your tax treatment is if you're a flow through or not.
And then just as a whole, gentlemen, looking at employees, sole proprietorships, and that general question, if you are a sole proprietor, how are you calculating payroll, if you're the only employee?
So that one is pretty straightforward. That would mean all of your business income is shown on a Schedule C to your personal income tax. And the rules say that you would look at line 31 on your Schedule C, which is the net income number, and then divide that by 12 and multiply by 2.5 or 3.5, depending on whether you're in the restaurant and hospitality space or not. And then the only other thing is, you're still subject to the $100,000 cap that would apply to any compensation. So you have to be aware of that as well.
Okay, great. And then what can you include in your payroll costs? For instance, can you include retirement contributions?
Generally, yes. And the new law has expanded the ability to include retirement contributions. There are some specific details with respect to the type of entity that you are and whether retirement benefits for owners, as they're defined, can be included or not. So that's something where you should get into the details of your specific business. But as a starting point, there are provisions to include retirement, the employer contribution to retirement plans in that calculation.
Got it. And then this person specifically said they got $8,000 in PPP, all for payroll in March, $25,000 idle in December, which the person has not used yet. Will I get any forgiveness?
I'll take that one. They will. If they got the, did they say they did have the idle already, Paul?
That's correct.
What happens is was that a loan or was that a grant? If it was a loan, it's a non-issue. If it was a grant, it would be $10,000 or less. Do they
It was
indicate?
25,000 for EIDL and 8,000 for PPP.
I'm guessing then that it was a loan. It was not a grant. So that issue would be moot.
So just to clarify, they will not get forgiveness on the EIDL, but they can get, that doesn't impact whether or not they can get forgiveness on the PPP, as long as they've clearly designated that they use the PPP funds for appropriate purposes. And that's a record keeping thing. And again, for anybody who's getting PPP funds, being careful in documenting how you're using those funds so that you can show that you use 60% for payroll and the other, at least, and the other 40% are used for permitted purposes.
Yeah,
you should keep.
I agree entirely. What we're telling our clients here is that they should have not necessarily different accounts, but rather different bookkeeping systems that they can keep track of what was PPP funds versus what was EIDL for exactly the purposes Eric just mentioned. We're almost out of time. Can we go through a couple more?
Yeah, just as a follow-on to that question, my PPP loan was forgiven except for the EIDL grant. Are there any changes so this grant can be forgiven?
The government will come back now and get that grant piece forgiven as well in light of the new law.
Yeah, and one of the new slides in the handout will say that actually what's going to happen is that the SBA is going to notify the lender. And so if you got forgiveness already and they took out the amount for your advance, you actually will get paid back by the lender for that amount, but don't hold me to a timetable because no one knows yet.
Okay. On the second draw for PPP, the area that says purpose of loan selected, select all that apply. After payroll and rent utilities, I have to buy inventory for my reading glass company. Can I use that and check covered supplier costs? Or
Yes.
would that fail, or would that fall under other, or neither?
My experience with some of my clients who've done that and who've talked to their bankers, if it's a supply that's used directly in your business, you could put it in that category. Eric or Greg, do you have any thoughts about that?
I would agree with that.
Okay. And then this is just a follow on to the other question that was asked previously. Business took out PPP loan in 2020, but requests and receives forgiveness in 2021. Does the loan turn into a grant for 2020 or 2021?
Greg, do you want to take that or you want me to take it?
Well, we can try it. You know, there was an IRS ruling that late last year that indicated that if you believed your triple P loan would become a grant, that for tax purposes you should consider it in tax year 2020 as a grant. And so you probably want to think of it as a grant for tax purposes even this year, even in 2020, even though you didn't receive forgiveness, if you believe you will get forgiveness. I think that's how I would think about it, Eric. I don't know how you would.
I agree. I think the IRS ruling was very clear on that, and particularly in light of the simplified forgiveness process now, unless you know that you didn't spend money in a way that would achieve forgiveness, if you have a reasonable belief that you will get forgiven, treat it in 2020 as a grant for tax purposes.
Oh, Paula, do we have any other questions remaining?
Yeah, we do. We have 5 more. And what I'd like to do is so we can answer those questions. I know that a lot of folks are on a time constraint. So we do want to thank you. We do want to offer the survey for you, which is in the chat, which we would appreciate if you could complete that survey. If you need a SCORE mentor, please reach out to us and let us know that. And if you guys have a few more minutes, I'd just like to finish up these 5 questions, if that's okay.
Yeah, we're okay.
Okay.
Yep, absolutely.
So how do you know if you received an EIDL loan or grant?
Well, if you got a grant, it usually just appeared in your bank account. And you probably said, where did that money come from? And that was the EIDL grant. It's probably anywhere from a 1,000 to 10,000. If you got an EIDL loan, you would actually got a loan application that would ask you if you desired to accept the loan, and you could go anywhere from 0% to 100%, and you would actually get some loan documents also sent to you.
That's a great answer. I agree entirely.
I don't know if you guys are comfortable answering this question. It seems more like a CPA consult, but what if a sole proprietor took home office deduction and used credits from previous years and now has 0 on line 29 of Schedule C? Can they use line 30? I don't, and then she said, sorry, line 29. Maybe she meant 0 on line 31. I think that's a CPA question, but I don't know if you folks want to try to take a stab at that.
No, I agree with you, Paula. That's very fact specific, and
Yeah,
she
I
should
would
work
definitely
with.
consult CPA on that piece. Again, this one is a little bit fact specific as well, but for the purposes of forgiveness, my business was down 79% in the second quarter, April, May, June of 2020 compared to 2019. However, I received an SBA loan for $50,000 in June. Do I need to include that in my gross receipts?
No.
Then I assume that will change the percent my company was down if I need to include that.
No, that's a loan is not gross receipts. A loan, this is maybe a little more technical answer than you want, but the loan goes onto a balance sheet as debt. It doesn't go onto the income statement as sales.
Okay, and then final question, independent contractor, first-time borrower, is the entire payroll within the 100K and time limits available for forgiveness, or do you have to show a comparison between 2019 and 2020?
This is a first-time borrower?
First-time borrower, correct.
So the year-over-year decline requirements do not apply to first draws.
Okay. Perfect.
Great.
Well, I think that closes us out, gentlemen. I truly appreciate all that you have provided for us here. And now we're getting a couple more questions that are coming through here at the very last minute. Here's the Hail Mary passes. Pass-through partnership LLC, didn't take either one of the loans yet. Software product and services firm, please advise me with which option to borrow money. Had only 20,000 in revenue in 2020, nothing in 2019, and I've been using money from my 401k to run the firm. I have received around 400,000 in orders in December of 2020, but not received payments yet.
One thing I would start with to that question is whether or not they were in business in February of 2020. If they were in business, they can go ahead and apply, but it sounded like they may not have been in business, but grew the business later in the year. Did they say when they were in business, Paula?
Does not. Harry, if you're on there and you type in the Q&A, I can post that to your question.
Good. What was the other one?
The other one, what documentation do you need to show a need for the second draw? If you have an EIDL loan of 150,000, but the 25% decline is met, do you show a need?
Yeah, let me take that.
Go ahead.
Just for a quick, one of the people that I depend on for information is this tax attorney up in St. Petersburg, Alan Gassman, and he's made an important issue out of necessity. The application for second round and first round PPP now does not require details of the necessity, but what Mr. Gassman has said is that when it comes time to audit the PPP loans, given all of the fraud and abuse that went on with the first round of PPP loans, it's really important that you are able to demonstrate that you had necessity. And as a matter of fact, I think what I'll do is I'll include a slide that defines what necessity is. Eric and Greg, do you have any other thoughts?
So the 25% reduction is the requirement for determining necessity. The EIDL loan and the fact that you've borrowed money that you ultimately will need to pay back doesn't talk to whether there was an impact on your business or not. If the business was impacted and you have the necessity to keep people employed, I think as long as you can document that 25% by showing year over year quarterly financial statements and certifying that those statements are accurate, you have probably met the requirement for showing necessity.
Yeah, I would agree with Eric that the 25%, I would look at as a safe harbor, that if you hit the 25%, you have a safe harbor for any argument that you have not proven necessity. So I think that's the hurdle you need to reach.
Gentlemen, I do have an answer from Harry. The business was started in 2017. Would you like me to repeat that question, or do you remember what it was?
Now, would you repeat it?
Sure. He has a pass-through partnership LLC, didn't take either one of the loans yet. He had 20,000 in revenue in 2020, nothing in 2019. Been using money from his 401k to run the firm. He has received around 400,000 in orders in December of 2020, but not received payments yet.
So Eric and Greg, he was in business, so he's eligible. He's a first-time borrower. He had nothing in 19.
That's
and
correct.
Money in 20, so he can meet the 25% reduction rule, right? So
well, there is no 25% reduction rule because he's a first-time
right.
borrower. So I think the question here becomes really how much he can borrow under or get under the PPP, and that is a determination he'd have to use either since he was in business before 2019, either 2019 full year or 2020 full year for his wages to do the calculation. And I don't know if it's only him or he has employees and the like. So this is a good example of working with a mentor to help do that calculation specific to the business. But the issue will be not one of eligibility as a first-time borrower, but one of calculating the amount that he may be eligible for.
And Eric, as a first time, he's going to need questions about the requirements of SBA 7A. If it actually means you have to be profitable, as an SBA 7A loan, that section of the new borrower
Yes.
requirement. So there might be some issues there for him. But anyways, this, as Eric said, this is one that he really needs to sit down with a mentor and dig deeper than we have time to do now.
Definitely. Two final questions, gentlemen. Lady here, sole proprietor with a home-based business. Is she eligible for first-time PPP? Apparently, she had the EIDL amount that she got last year. She already used all of it. And she wants to know if she can apply for first-time borrower for PPP.
Yes.
Okay. And then final question here. If you received a grant from the CARES Act, is that considered income for the purposes of showing the amount of percentage reduction?
No, it's excluded. That's specifically called out in the SBA guidance.
Okay, fantastic. Gentlemen, thank you so much for your time and extending your time to answer all those questions. We really appreciate that and value your input in helping our folks here in Minnesota. And thank you all for participating tonight. Have a great night.
Good night, everyone.
Good night. Thank
Right.
you.